Your behalf. What does that mean on your behalf? Like you pay her to take trades for you? Did she make money on that? All right. Yeah. I mean, it's going, like it's going. It's not there yet. Like that's what I was discussing on Apple is that it's just starting its run up. It's not really, in the rocket phase yet. So with Apple, the main pattern which I was discussing is that this macro trend line from the January 2023 bottom, connecting it with the October 2023 bottom, that's where we defended last week, which is why I wanted to try Lotus over here. Like Apple was the only big company which had not started rallying for January month, so it was like overdue for that rocket ship to start, and it did. Like it's definitely there now. Like it's starting. It's becoming more and more clear that this is like an ascending triangle from January 2023, July 2023 top, October 2023 bottom, December top in a way, like macro, not a macro top, like a local top. Then the defense happened over here on January 17th. So the earning comes on February 1st, and I would be very curious to see how this monthly candle closes. If we manage to rally Apple like this month itself, and we close it above 198 in the next 2 weeks, going into the Fed meeting, then earnings is just gonna like add fuel to the fire, and it will likely rally to $20 after earnings. So the reason I say $220 is that this is 0.618 target, 1.618, 161.8 extension. $218 would be the maximum target zone, which is essentially what I'm targeting on these May calls which I took. But I did take like 200 strike, but that's not my target though. Like that's just like the sweet spot for me down here when I opened it. That I bought it like at around four or something. So if it starts going into money, that will be trading somewhere near like 10. And if it reaches my final target at 218, it might be trading somewhere near like 20. So that's like 5 times the return on the investment if that actually goes to plan. 220, yeah. Yeah. Which is basically why I took it because the risk reward ratio is like 1 to 5 for me. That if I get stopped out on it, like not even stopped out, but basically if it fell through the trend line and my stop loss on this thing was below here, below 173. The reason I say that is because you see this E mark, that's where the earnings happened. So on close after this earnings basically went down, filled this gap the day after we started punching higher. So whenever there's like an earnings reaction to the bullish side, the low of the earnings candle is where you need to have your stop loss for swing positions. All right, so even if you take a fib from this low, which was the earnings low past previously, why do you think it was defending over here? It's a 0.705 fib. So that was one of the main reasons I was like accumulating Apple over here. That I kind of like knew that they're not gonna like let this company fall. Because eventually, another thing you need to consider for this year, specifically this year, not like in general, this is very important. So pay attention to what I'm going to talk about over here. It's um, it's gonna resonate with why I've been like bullish on the markets last year as well, going into when this bottom got printed in, and I was like bullish over here too, like noticing that there was this falling wedge getting created on Apple, even though the technical structures were like bullish, but there was like a bigger narrative in play on why stocks should be going up. Oh, where the stop loss should be? It should be down below here, where like we entered somewhere near like 182 when I took the option calls on Apple. The stop loss should be at the low which was formed the day after earnings came out previously. Okay, so it's 173.35. Earnings came out on after close on 2nd November. So the low which was formed on 3rd November, the day after, when market opened after earnings, and you started rallying, that's where your stop loss should be on this trade. Also, since that's out of the way, I'm going to go into the fact why I think that this year is going to be very, very bullish, and this is where you can like actually like gain a lot of wealth, something which you may not be able to do like for 3 4 years together. Like the forces in play are very, very strong, and you just don't want to fight them. Like you need to understand what the game is, like how it's being played, and how you need to be positioning going into it. Like me positioning for Apple calls for May is like one part of the game on why I think it's going to be playing out. And okay, so the game is that this year in November there will be presidential elections, and it will likely be a rematch between Trump and Biden. I don't particularly think that Biden will be running re-election. Like their party is just gonna like kick him out, or like they're gonna put in some other candidate. But you have to consider two scenarios here. Trump will be the nominee, like after the Ohio primary, Trump came out as the clear victor, that he won by like a big, big margin against other Republican nominees who were trying to run against him. Ron DeSantis came second, but he only got like 20% of the votes. Okay, Nikki Haley came third. She got like 19% of the votes. Vivek Ramaswamy came fourth. He got like 7% of the votes. Trump came first. He got like 56% of the votes. So he himself combined had like more votes than other candidates combined. Okay, so that gives you like a very clear indication that in the Republican Party, Trump is reigning supreme. Like, okay, he has the real control in the party. So if he is running for president and he doesn't want to like drop out, then there's no way you can like defeat him. And whatever this thing that they're doing with the indictment or whatnot, they're just like adding fuel to the fire, and they're solidifying Trump's candidacy to become the nominee in federal elections. Okay, so that's the first thing to consider. Second thing to consider is that um, the Biden administration is very terrible in terms of keeping themselves in power. Like they haven't been doing a good job with policy. They haven't been doing good job with like a lot of stuff, and people are kind of like on the air in terms of like inflation being high in the past 2 3 years. The whole war thing going on with Ukraine and whatnot, and sending funding to Ukraine. Like people are very upset about that too, or you know just try to be involved in everybody's business. That's something which is not a good look for the administration. So one thing which they're going to do in their power, which is the Treasury Secretary of the Biden administration, which is Janet Yellen, they will do everything to prop up the stock market. Okay, not because they want to keep Biden administration in power, but they're going to do it because they want to keep Trump out of office. Okay, so there's a personal bias over that. Knowing that Trump will be the nominee to hold the re-election in November, they cannot afford to have the general populace suffering with their investments going into the November elections. All right. And that's not because they are, well, wanting to keep themselves in power. Like, sure, it would be nice if they would be able to keep themselves in power, but the main bias is that they hate Trump so much, like, they consider them as his mortal enemy. Like, they took a blood oath when Trump took office in 2016 to get rid of him forever, because that was not supposed to happen. Like, for establishment, that's a very, very throwing a wrench in their global economic plan for the world kind of a thing. That he's an anomaly for the establishment who was never supposed to enter politics. Okay, so now that he has like a support of the people, they will pull every lever possible to keep Trump out of office. And one of that lever is pumping money into the economy to keep markets going higher. Because if people are happy with their investments, they will always vote for somebody who's trying to help them with their finances, or even giving free money out would be like yeah, basically make more money. But you will see like appreciation of asset prices because of that. And that's a very, very key thing to consider. The second thing to consider is that Jerome Powell, who has been the wild card for the past 2 years, 3 years, ever since this rate hike cycle started. He knew well going into this Biden presidency that he will have full reins on what to do with the economy because nobody's going to be stopping him once he gets reappointed as the Fed governor. And he got reappointed the moment he got confirmed. He turned on the taps and he started raising rates. All right, and that happened in 2022 March. So he also knew the timeline. When exactly would he be able to keep rates high till what time? He knew that the presidential elections are going to be in November 2024. So he has at least 2 years to get everything in control, get inflation in control, bring asset prices down, or do something about the economy because he's actually a diehard patriot. He genuinely cares about general people like us, and he doesn't want to see us get hurt. Okay, so he's even though he was appointed by Donald Trump in 2016, and he got renominated under Biden presidency by a Democrat to run the economy again. That shows that he's a bipartisan appointment. And Rick, wait, you cut out. Can you repeat that? Yeah, he right. He genuinely just truly cares about America as a country, and he does not care about the politics at all. But there is another thing to consider about him. He is also a human. When I say he's a human, he has feelings. Okay, so when he was in office under presidency of Trump, he was berated, he was humiliated, he was publicly called out by President Trump multiple times when Trump was in office because Trump was bent over heels wanting him to cut interest rates for a year and a half when he tried to raise interest rates back in 2018 December, I believe. If I go on Nasdaq's chart, there was a mini recession which happened in 2019. You remember this one? This is a 2020 over here in 2018. So from September top till here, this is where Powell was actually hiking rates, and the market did not like it at all, and that the market started crashing over here. So Trump got on a call with him, and he basically set him straight, be you cut rates or I'm gonna fire you, stuff like that. Okay, he can't exactly fire him. He will have to go through the Supreme Court to actually carry out the motion that he has to remove him from office. But that would be a whole hassle. The Fed members, on the Fed board, there's 14 members who sit there who have a vote. Powell hosts the supreme vote. If he doesn't what the other 14 members are doing, Powell can veto their motion. But they all kind of go along with Powell because he's the leader of the group. But point being that if Trump has to remove him from office, Trump will go and appeal to the Supreme Court. The Supreme Court would then give the 14 members of the board a chance to vote on the matter if they want to keep Powell in office or not. And if the 14 members actually vote against him that they want to remove him, then you can go ahead and remove the Fed governor. So it's a very lengthy process. It's not something okay, I don't like you, you're fired. No, not like that. It's not that simple. So that was the whole thing over there too. And Powell remembers this, that he tried to come after his chair, and Powell did not like the fact that he was humiliated, and Trump stopped him from doing his job of trying to get economy in order, trying to reduce the balance sheet, and basically making economy stronger than what it was back then. All right, so coming back over here, Powell will do everything possible to not have Trump back in office because he has a personal bias against Trump. He does not want Trump to be there to micromanage him to do his job. Okay, because Powell has to stay here in this term till 2026. Powell was reappointed in 2022, which means that he gets 4 years to actually stay in office, even after whatever happens with the elections over here in 2024 November, February, March. I want to say March 2026. Wait, I cannot hear you. Can I say that? Yeah, your microphone is a bit Wonky. It's May. Oh, so let me check. Follow, uh, yeah, it expires in May 2026. Yeah. Mm-hmm. Yeah. Yes. So while he's there, but if Trump gets in office, Trump will get to scapegoat him for a year and a half, and Powell does not tolerate it. Like, he will not tolerate that. So there is like a inherent bias with Powell that he will do something to keep Trump out of office, and that's where the market was very much surprised in December 14th Fed meeting when Powell came out and he turned dovish, that he's like, okay, I'm looking at rate cuts, even though there was no signal whatsoever with the data that that you should be looking at rate cuts. But Powell is not going with the data now. Like, it's one thing to say that I'm looking at data to cut rates, but another thing to just blindly go out and say that, okay, yeah, I'm looking to cut rates now, because he's following the calendar based on when the federal elections are going to happen in November. All right, so that is something to keep in mind. He does not really care much about the data, but he cares more about keeping Trump out of office. So that's why I was paying attention to what's happening with the Ohio primary to see where exactly things lie with the Republican nomination. Because if Trump goes for renomination, um, it's a done deal that he will be becoming president if nothing is done about it. Because Biden can't defeat him in a re-election. No way that happens. They will have to come up with some a backup plan, like a plan B or plan C, something to nominate somebody who can actually have a fair fight against Trump. Um, so that's something to keep in mind. And the other thing I mentioned is Yellen. The main reason on what's driving the markets higher, basically from this bottom to here, knowing that Powell has rates sitting at 5.5%. How exactly is the market going higher? It's a genuine question. Everybody wants answering. But there's nobody who has a real answer to it, despite a few people. And one of the few people who was listening to you and why the market's having pushing out like this is because the Treasury Secretary Yellen has been issuing bond coupons to basically flood the market with more and more capital. And I was like, how can you do that? How can you just come out and do something opposite of what Powell is trying to do? They're supposed to be one united team. If Powell is saying I want to bring the markets down, Yell is saying I want to take the markets up. So they're both opposite forces trying to fight each other, and that was very very absurd for me to think that why exactly are the markets going up like this. Sure, there were technical reasons for me to go long, but then I eventually had to go back and study what's the fundamental driver behind it. Why exactly is there liquidity pumping the market when Powell is really putting the lid on liquidity? So markets always used to care about the Fed, right? There's a saying about do not try to fight the Fed, you're gonna lose it. But nobody really taught us that don't try to fight the Treasury Secretary as well. That was never something anybody talked about in the financial industry or any kind of trading group or any kind of mentors which I've talked to. But that's where I realized that okay, well, Treasury Secretary controls the bond market, and the bond market controls everything, globally speaking. Not even just the equity market in US, but globally in terms of what's going to happen with the foreign currencies, what's going to happen with the dollar index, what's going to happen with other stock indices. That's where the Treasury Secretary comes in. So when this top was printed on Dixie, that's where stock indices topped out as well. That was also when Janet Yellen was like, okay, well, I got the signal that inflation has topped out and it's on a downward trajectory, because that's the last print over here was the real confirmation came in that inflation has peaked out at 8%. It dropped to 7% within a month. And that was a very, very big signal that the next month's inflation print is going to be even more lower, and came out 6.4. And then the consecutive month came out to 5.9. So the Treasury Secretary is only going to be helping Powell to do things the way he wants to do as long as inflation is above 6%. All right. That's where things are really bad with the economy. You cannot really have inflation above 6%. But the moment inflation started dropping below 6%, the Treasury Secretary flipped sides and she wanted to help the elites, the real asset owners of stock indices or like BlackRock, Vanguard, State Street, all the big asset owners in the US economy because they are the real donors of the presidential campaigns and whatnot. They will be like, giving you millions of dollars to like run their campaign. So you cannot really have them upset with their like, their investments going down. Um, so Janet Yellen turned on the taps in terms of issuing treasury coupons so that everybody like burn their savings to buy those coupons and basically bring the yields down. What I mean by bringing the yields down, she started pumping the bonds from here at the bottom and be like, well, the time for bonds being this low is over. Like, you're gonna get bankrupt or you're gonna buy my bonds. If you don't buy my bonds, I'm gonna like burn through your savings accounts and I'm physically gonna make sure that your entire savings gets put into the bond market and you have to buy my bonds. All right, so that's where this reversal happened in October 2023 because of the quarterly reassurance. Like QRA is something is the term. Like, I don't even know what that thing is. QRA Treasury. I'm gonna post this link in the discussion group. You can check that out. So this is the program. We're quarterly refunding, Treasury quarterly refunding program, where Janet Yellen really spiced up the coupon issuance. On because of the coupon issuance getting higher, the Treasury notes were getting flooded in the market. When Treasury notes were getting flooded in the market, basically your debt, which was getting refinanced at a much higher rate, it was getting refinanced at a much lower rate in comparison. So what she was doing is she was basically forcing the 10-year yields to start going down, and by issuing that many treasury coupons for every asset manager or like every foreign investor to basically buy her coupons, that it's something the treasury secretary can do. If you don't buy her coupons or if you don't basically place your money into the bond market, well, then she's basically gonna deny any kind of funding whatsoever for your projects and whatnot. Right? Okay, think about it this way. Like, I don't particularly understand the mechanics on how this would like affect the economy overall, but what I do realize is that this particular program which she's doing, it brings the 10-year yields down. And 10-year yields are something which is controlled by the market itself, like the general investment market. Like it's not something which is controlled by the Fed. Like the Fed can't really do that. So what Janet Yellen is doing is that she's becoming the major player in the bond market, that she's basically coming in, increasing the supply of the treasury coupons. When you increase the supply of treasury coupons, that basically puts a bid in the bond market that the 10-year bonds start going up. It is this ticker bond futures. This is the 10-year bond. So 10-year yields is the inverse of 10-year bonds. So if the bonds are going up, like the 10-year bonds that is, that basically means the 10-year yields go down, which they have been in the past, I don't know, 4 or 5 months. Past 2 months, like you really saw like a significant downturn in these 2 months. So when you saw November and December having a very sharp downturn, what happened to the equity market? Like, look at the monthly chart. Like, the equity market was actually going down for like 3 months. When Janet Yellen came in and she increased the issuance, November and December, they saw like a very sharp run up in the stock indices. Like, you would remember me being like, okay, you need to be bullish in the market, but this pattern is breaking out. Sure, like, there was like a technical pattern which was playing out, but there was a catalyst on top of it too. But the catalyst was like Janet Yellen basically turning on the taps and be like, you have to come buy my bonds. If you don't buy my bonds, I'm gonna like basically bankrupt you. But neither you're gonna have money in your bank account to do whatever you want to do, and I'm not gonna be able to pump the market either. So it's like a lose lose for both of us. But if you come and buy my bonds and bring the yields down, I will basically give you money so that you can buy and invest in the stock market or whatever you want to do, buy crypto, buy cars, buy vacation packages, whatever you like to, you can go do it. But you need to come up buy my bonds too, first of all. Okay, so she forced the hand of every big asset manager to go and buy their bonds, and the bonds started rallying, and that basically brought the 10-year yields down. If the 10-year yields started coming down, that basically meant the DXY started coming down, which was over here. When DXY started coming down, that basically put a basic like a very big thrust in the equity indices and the stocks as well on top of it. So this is how the cycle was like completely flipped by Janet Yellen. That was a whole connection which most people were missing on how exactly it was influencing the stock market, it was influencing crypto market, it was influencing every risk on asset. When Powell has rates sitting at 5.5%, all right, like everybody keeps talking about you should not fight the Fed, but nobody really talked about do not fight the Treasury Secretary as well. So that was something I learned in November and December on why exactly the market is like pumping the way it is because the Treasury Secretary has a personal bias against Trump. Like she does not want him in office at all. Like she has more of a bias than Pavel does because before Trump came in office, like when he was doing his presidential campaign in 2015, 2016, Janet Yellen was the federal board governor before Pavel was appointed. And she was up for reappointment. And Trump basically was like, she's a very mean lady. I don't like her. Fire her. I'm gonna get Pavel in office. So he humiliated her too, publicly, being like, you know nothing, you're stupid, and I don't want you in office. And she held that humiliation to heart, and she has been on a death march to like basically keep him out of office ever since she got appointed as a Treasury Secretary. All right, so now you know the link in terms of why exactly are the markets pumping, because there's a political motive behind it that these two key players, Pavel and Janet Yellen, they will do everything in their power to keep Trump out of office. And the only way they can do it is that they have to pump the markets higher, because if you pump the markets higher, people like us who have, some kind of investment in crypto or stocks or maybe even bonds, their investment basically appreciates. And if their investment appreciates, they're happy with the current government and they're not going to vote for Trump because yeah, they're happy. All right, so now you kind of understand where we are in terms of how the game is played. All right, good. Now, since you know how the game is played, this is where our job as traders comes into play to look for patterns and technical triggers to go long on the market. All right. Now, in the past week, I did mention that Nasdaq was a very strong long over here. I think if you go and look back in the channel for Nasdaq, I had mentioned that this was an ABC correction at Nasdaq, like this, and we were going to start a wave 5 up. You know what I'm going to do? I'm going to go back in the Nasdaq's channel and I will post the market link for what I had mentioned. This is, like I just mentioned, the old chart where I was saying that Nasdaq is going to be going higher after posting a bottom over here. And this is what it looks like right now. Like, yeah, we even went above the 17K target and we're sitting at like 17,347. That's how bullish the market is. Like, it's not about, making a new all-time high. It's more so about starting the rally for the year. And another thing you need to do is you need to put this indicator on your chart. Opens indicator, this thing. So basically go to indicators, type in opens, and there will come this indicator here, MWDXO opens. Click on that, and it's gonna basically show you this, where you will get like these dotted lines over here. This is very important for you to understand on how to use this indicator. So what it does is it basically maps out the open levels on when the market opens for the day or the week or the month. All right, so the way it works is that there are three opens to be considering. First one is the daily open. That is where the candle for the day opens, and it will basically highlight the price at the time when the market opens for the day. It highlights it in green dot. And when the market opens for the week, like the market is going to open on Sunday, 2 p.m. my time, which will be 5 p.m. EST. That will be the weekly open because the market is opening with the week, and that will be highlighted in red dots. The monthly open is when the market opens for the month, which is the first date of the month, like 1st January. So first trading day of the month is what matters because the market is closed on Sunday, on which is the first. The market is going to open on 2nd January. All right, so it will highlight the opening of the monthly candle on 2nd January 2 p.m., which will be highlighted in yellow dot. So these levels are SR levels by themselves. So you can likely see that they're being mapped out over here, like and they get extended in time. So the month actually started over here, right? You see this date down here? It says Monday, January 24th, 2 p.m. So this is where the market had opened at this candle, and this level got printed when the market opened over here. And the moment the market opened, we started trading downside over here, and you had a close below this monthly open, and you started flushing right after that. So you never revisited this level until like the market reversed from like another SR point, and then eventually rallied. Now it's very common that whenever you revisit like a monthly open, the market either rejects it and goes down, or what it's going to do is that it will consolidate, gaining energy to eventually then punch through the SR level and flip it and turn bullish. So in this case, it consolidated, and I could see the consolidation in real time. And I could also map out the Elliott wave count and be like, okay, well, I can see that it has tagged the monthly open. It's not wanting to actually rally above it, but it's consolidating, gaining energy, so that eventually, when a catalyst comes on, you will be punching above the monthly open. So the way you would utilize this utilize it is that whenever market trades above the monthly open on a very impulsive move, there will always be a retest of that level. And that's where you can enter long and basically write it up like that. And that's how I profited in my SPX longs as well. That I could see in real time that these SR levels were getting traversed and the market was like punching higher above them. And it was coming back for a retest and then going higher over them. Okay, so that's very important to see that you have these levels mapped out because of this indicator, and that will like really help you with your trading whenever you're trying to decide what the directional bias should be. So whenever you're below the monthly open, you should not be looking for longs. Like okay, yes, you should look for longs when there's like an obvious setup based on some other pattern which you're noticing. But the high probability longs really start when you go above these open levels and you're going for like a retest, like it went for a retest over here, and that was like a long you should be taking. That's more high probability than trying to long over here. So that's something to keep in mind, and where the opens indicator is or where the open levels are. So if I go on SPX, when I long SPX over here and it punched above these open levels, like this 4 hour candle, I was talking in real time that I'm watching where this 4 hour candle is gonna close. I'm watching where like the daily candle is gonna close. I'm watching where this 2 hour bullish engulfing is gonna close. So the moment market closed this 4 hour candle above this weekly open and this monthly open, I added even more to my long position. Like how about that? Like I had a long position sitting down here because of a separate setup. Like I had a long position over here and here, which I long, like it was like a knife catching trade for me. But I was confident that it would like actually turn and start rolling from there. But I did not know that it was actually going to do it this week or it's going to go do it next week. But the confirmation came when you actually rallied about these SR levels, like marked in red and yellow, when you closed above here, the moment this close happened, I doubled on my position. I had like 200 contracts down here, like at this level. When I closed over here and you had this green dot level open up, I added like 200 more contracts. I had 400 contracts in total. And I basically wrote them up to like 4820, which is this previous all-time high over here. Like I was that confident that it was going to go up for a new all-time high because the market had closed above the major resistance levels. Now, most people would not be able to anticipate that this is going to happen in real time because they don't know about the opens indicator, they don't know about LTV, they don't know about how the liquidity kind of works. But knowing this thing over time has really helped my trading. That when to know that you can compound on your existing position and you can like double down on whatever you're trading on and like double your profits based on that because these things they don't like happen like every day. They only happen like once in 2 weeks or once in 3 weeks. So you need to be aware when they're like playing out in front of you. And the next thing you need to realize is that whenever you see these open indicators like really narrowed down into like one specific level, that's how you know this is of high interest. Like the market really cares about this level. And like you will see these like levels printed out in real time on the right side over here. So the weekly open is at 4779, the monthly open is at 4774, the daily open is at 4771. All these levels are like just 3 points apart. Okay, so now that we have like higher time frame closes happening, what you can do is go on the higher time frame, which is on the 3-day chart, and you can see that the market has printed a very, very strong bullish engulfing on the 3-day chart. Right, so this was a down 3-day candle. He took out the liquidity. It was an inside 3-day candle. That's why I was longing over here. That was the pattern I was like anticipating. My whole setup was that SPX. Let's go here. I'm going to turn off the open indicator. Like this I button, when you press it, it basically turns on and turns off the open indicator. So the whole time when I was like, doing these live streams with you for the past year and a half, past 2 years, I never had the open indicator on because I knew, that everybody would be watching my live streams. I wanted to see who's exactly serious about trading and who's not serious about trading. So I didn't want to give all the nuggets out in terms of how I'm profitable or how I'm reading the market in real time. Like I have to basically go back and see, okay, who's serious, who's not going to be serious. Like in a year or so, they're going to float away. They're not going to be on the live streams at all. They're not going to be listening and whatnot. But whoever like watches the live streams or watches the recording, they're gonna like learn something new on how to like improve their edge, how to basically become more profitable in trading, on how to like once you do know what the high time frame bias is, how do you go in the lower time frame chart and be like sharper in terms of how you want to enter the market, how you want to exit the market, what are you targeting, and how are you like risk managing your positions. All right, so this is where the risk management part comes in. That when you turn on the open indicator, it gives you more confidence if you should be like adding onto your position or not. But if it is something which is gonna rally even more after you enter the market. So in our case, why I was bullish over here, the simple reason is that like over here, like if I go to the 12-hour chart, which is the high time frame chart, like it's very simple for me to spot that this was a 1, 2, 3, 4, 5 up like that, right? And if you go on the hourly chart, you can see that properly over here too. That this pullback was a 4, this push was a 5, and this was a ABC pullback as a 2. That's a 1, 2, 3, 4, 5. And this was where the CPI event happened, and we started pullback after that. So in my mind, this was just amazing in terms of how the market was playing out. That I could definitely see this was an A wave down to 0.382, B wave up. It never took at the high, so that's a B wave up, and then it came down for a C wave. So when I saw this reaction happen after 0.618 top, that's where I started going long over here when these lows were taken out at this 0.618 top. So I kept holding the long position, and when this long position gave me more confirmation that it went above this high, and it also went above these SR levels, I added more to my position. and I wrote it up to 48.20, which was the previous all-time high. Now, if you go closer and notice that when you close this daily candle, because this daily candle had to close above the key SR levels of monthly open and weekly SR as well, right? So when the new daily open level open, notice how the hourly candle never traded below the daily open. It came down exactly to the daily open level, tapped it, and then started going boom, 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 higher like that. Even when the market opened, this was overnight, by the way. Okay, this is overnight price action at 6 p.m., 7 p.m., 8 p.m., 9 p.m., 10 p.m. So even overnight, the algorithm which is driving the market, it realizes where the key SR levels are, and since the bias is to the upside, it's going to defend those key SR levels. So when it rallied, and when we opened the market over here, it came down to test this support zone, which was formed overnight on the hourly chart, tapped it right at the high of that, and it went punching for the rest of the day. Now notice how precise this is. Now this is a support zone because it was formed overnight at a daily SR level, right? If you would have gone below this SR level, then it would have been bad that the market would be like, going down. But I knew for a fact it's not going to do that. you know, there were so many things which were happening in real time that which were adding confidence to the fact that this push was going to happen because my pattern, which was in play, was over here on the 2-day chart, which was this inside 2-day candle failure. All right, so I did not know, I did not have to know what the next candle was going to do because what I saw is that this 2-day candle closed like this after taking out these lows. So automatically in my mind, I knew for a fact that the next 2-day candle is going to be like a massive pump happening because I've seen this pattern play out time and time again in the past, maybe 2 years, 3 years. I can go back and I can show you when exactly these patterns are played out because I've actually like positioned in these patterns time and time again. So like for example, this was one of the patterns I had played in the past. See that? It actually like took out the lows and then went down for the highs and it kept punching higher. So I'm quite aware that this pattern is like a liquidity grab pattern, that when you go and attack the downside liquidity and you reject it, the next candle is always pumping higher to attack the upside liquidity. All right, so that's one scenario where this pattern has played out. The other scenario I remember was like a while ago. Like that's the thing. These patterns are not common. They're very rare. So when I see them happen in real time, I'm like, okay, this is like a big money maker for me because it's telling me that something very cool is gonna happen in the market. All right, so over here, this is where I remember playing this pattern. There was this inside 2-day candle like that. Okay. And the next 2-day candle went down and it punched higher. It closed like this, right? So when it closed like this after taking out this liquidity to the downside, the next 2-day candle, I knew for a fact that it's going to punch higher. It's going to go and tag this liquidity at the top side. So I like, not only did I long the bottom, but when it closed like this, I added even more to my long position. That's how confident I was that it was going to do that. All right, so my long position was entered over here at 38.57 back then. This was back in March 2021. Okay. So when you're going down to the lower time frame charts, you can likely see that on the 4 hour, you had a gap down happening in the market. So in the market open here, this was 7 a.m. I think there was like some news event happening back then. So when this thing happened and the market punched higher, like when this swing low got formed, I was basically long over here at 38.80. And when I saw this thing happen over here, that this bullish engulfing got formed in the hourly chart. I added even more to my long position. I'm like, no way this thing goes down now. And I just like held it. Like I think Jeff, I was managing your prop firm account too. Like I added it on your account as well. I added it into my account, and we both made like 20k, 20k in both of our accounts because of the setup. And there it is. That's where it was pumping. And I took a lot of time to actually go to learn, but I had time to actually hold that position. So that's where the target was met. Longing over here on the swing low position, adding more to the position, kept holding it till here, closed it over here. So that's a very decent 100-point trade on SPX. That's like 2.37. Okay. So the confirmation came in when you started trading about this weekly SR. And notice how, you know, even though the weekly SR started trading and you closed the daily candle over here, right? This is where you close the daily candle. I was anticipating that the next daily candle is going to be a pump because it got rejected over here. It defended the 0.5 and it closed above the weekly SR. There are three things happening at the same time, which was adding confidence that you would be going higher. And look what happened next day. The daily open, how precise is that? That the algorithm knows exactly where to defend for the next day. That overnight the price went up, came down, retested the support zone. This happened at 5 a.m. 6, 7, 8, 9, 10. This is 10 a.m. I can tell you for a fact this is FOMC day. Or maybe this is CPI day because FOMC happens in like, the Wednesdays is FOMC, but this is Friday, March 26th. And the pump is happening on 12 p.m. So it could be OPEX day as well, but this shows you that the algorithm is just driving the market. It came back down exactly to tap this daily open level, rejected it, and then went to the target. It's over here, and then eventually further up. So we started a new week over here, started pulling back, but the bigger target is over here. I personally don't hold positions going into the weekend, so I would have closed this trade over here. I remember that I may have looked for like a re-entry to go for this target sometime later in the week. But that shows you the power of this particular setup, which I took back then. And when I saw this thing happen in real time for SPX, in our case, right now, I was like, man, oh man, I'm gonna make so much money that this thing is playing out like from like a year and a half ago. It has happened like 6 months ago. So these patterns, when they're playing out in real time, you know for a fact that your bones are itching from inside. That I just want the market to go through with these 2 days because I know for a fact that I will be a bit richer than I was like 2 days ago. That these are like the 100% strike rate patterns for me personally. You only get to realize that these patterns work after you tested them again and again and again in the past. Like I've tested these patterns like multiple times for the past 3-4 years. So I also know that when you get something like this, where after taking out the downside liquidity, you punch higher, this is a bullish order block being formed on a much higher time frame. So that also means that the market has just printed a higher low in comparison to this higher low, in comparison to this higher low, and it will keep punching higher because of that. So all the people who are calling for like a crash or something, maybe they're right, maybe they're wrong. I don't know, but I know for a fact that I will be wrong for the market if it goes below here now. All right. So I just moved my baseline in terms of where I am wrong about the market from here to here to here to here. Let me just mark it out with levels instead. And so the first baseline was over here. Then you had this pullback. It moved from here to here. And then you had this pullback. I did not move it from here to here until like made a new all-time high, which was this over here. And then that got moved from this low to this low after you created this bullish engulfing. So I can tell you for a fact that because this bullish engulfing is present, it's easily going for 5,000. Like I don't even have to like measure anything whatsoever. I just know that that big number, like the big 000 dot number, that's where the market is going to go, and you need to be ready for that. That is what these coming events are going to do for S&P 500 or Nasdaq and whatnot. Like the earnings which are going to happen in the coming week or so with Netflix and Tesla, and then Apple, Amazon, Microsoft, Meta, and other tech companies. When they report, they will be adding like another 150-point rally on this space, and you'll be like tagging 5,000 or 5,050 something in the market. And on top of it, this is a very solid weekly close. This is also very solid 3-day close. This is also very solid 4 hour close. Like the way you want to look at it, this is as bullish as it can be. So yeah, you can like see some kind of a pullback, and you can like come down to like 4,800, tap the SR level, and from there I think it's off to the races, and you will be like seeing a lot more expansion happening in the S&P 500 for the next week or two. So this monthly candle is going to be pretty damn strong for January, that is. And that's how you need to be positioning for the coming week or so, knowing that what's going to be happening in the coming days for uh, the FOMC meeting on January 31st, and then Apple's earnings on February 1st. Is that clear so far on what I've discussed, on how I've managed, how I've risk managed, how I've positioned, how I have decided what the direction bias will be for the market based on the patterns I know, and using the open indicator as well? Is it all clear in your mind? I know you're there, Jeff. Say something. Yeah, that's good. If you do want, Nasdaq is going to be the obvious push happening, mainly because of Apple. That Apple has a much stronger pattern in play, which is the inside weekly candle over here. And that basically means that Apple will be pushing for new all-time highs at about $200 in the coming week or so. So if Apple's going to be pushing for new all-time highs, that will give a lot more push to Nasdaq itself. I mean, it's already pushing, but there will be more push coming for Nasdaq because of Apple pushing higher. And I haven't paid attention to Microsoft as much because there were better opportunities to play, but Microsoft already has like a very solid monthly candle. Can it push more? Yeah, why not? But I think Apple has more distance to it than Microsoft does. And Nvidia has already like moved a lot, so I'm not gonna be positioning Nvidia. Like every monthly candle you look at, Google has a very strong monthly candle. Netflix hasn't really started going yet, so I think Netflix will start going after the earnings happens. I'm gonna wait until after the earnings for Netflix before I start positioning in it. So yeah, it is a bullish pattern overall. The only thing is that Netflix kind of printed an inside weekly candle here. So with earnings, you kind of need to just like stay on the sidelines. However, the thing is that Netflix will be easily going for new all-time high. So the upside is like humongous for Netflix. Right, so you're still looking at another 45, 50% rally in Netflix. So I think you need to be paying attention to whatever the depth is in Netflix, and you need to be positioning long on that. So this quarterly candle hasn't really started going on Netflix. And I think it's waiting for its earnings before it's like kick things off. So for Netflix, this is a very strong bullish engulfing. But this is a bullish outlook on the quarterly chart. This is the 3 month chart, by the way. So if you're looking at the weekly chart, I will see how this thing plays out after earnings. If it gives a dip after earnings happens, then this area would be like a very strong area to add on to like longer dated option calls on Netflix. So you would be taking a trend line on Netflix from here like this. Like if it does come down and taps this trend line, I think that's a very solid buy. On you need to be going uber long on Netflix when it comes and taps this trend line at this support zone around $418. So I haven't fully deployed my capital yet in the market. Like I should have bought Nvidia when Nancy Pelosi bought Nvidia because that's like a very clear thing. Like you don't need any kind of like a chart pattern to tell you that Nvidia is gonna go. When you're reading on social media that Nancy Pelosi just like bought $20 million worth of option calls on Nvidia. Like she's like the epitome of insider trading. I don't know how she's not getting indicted or like getting jailed for using insider information to trade stocks. But whenever she buys something, just go buy that. You just know that thing is gonna go. Like she knows everything which is gonna happen with the legislation and whatnot on whatever is gonna cause the company to go higher, and she's profiting off of it. So that's insider trading for you. But that was like a very decent call for Nvidia that it's gonna go higher. But Nancy Pelosi bought Nvidia calls like right over here at 487, and the market just like went boing because of that. So that's for Netflix. Oh, sorry, that was for Nvidia. But for Netflix, I'll wait for earnings before I do something with that. Adobe. Yeah, this thing is ready now. It's gonna go. It's gonna go. It's gonna go. Adobe is following Nasdaq now. With Adobe, you need to realize is that even though I call for a bottom right over here, but this was the bottom forming on an Adobe. If you want, personally speaking, you can add for longer dated option calls in Adobe because it's trading above 612 now, and it's becoming more and more clear that it will be like breaking about this resistance zone, and it will be going for this all-time high over here at 700. So from 611 to 700, I think May dated option calls on Adobe would be very lucrative. That you could buy 700 strike Adobe option calls if you want. So the monthly candle on Adobe is looking very good, and I think in the coming month or so, it will be like punching higher for new all-time highs at some point. All right, but I think probably March, April, May. Yeah, May option calls would be very good. I'm not touching Tesla, by the way. Like it's bittersweet for me because I'm personally waiting for it to come down till here at about 177 now. And it's becoming more and more clear that it's going to do that. Because the pattern which is in play in Tesla is this inside monthly candle pattern. So when you know for certain that it's going for this liquidity, why try to long over here? I'm just going to wait for it to come and tap these lows and eventually go for the support zone over here. And that would also line up with this SR, number 179. So 170 to 179 is the area I'm looking for in Tesla before like start thinking of longing it. AMD. I just like went for the all-time highs in like one weekly candle. All right, all right. Yeah, I think it has more upside to it. It's not gonna stop over here. Like whenever you go sideways to down in like 3, 4, 5 monthly candles and you start punching higher like that, that basically shows you how much energy the market has. And that's something I'm anticipating that these monthly candles which you're looking at on AMD, there's so much distance which AMD has covered on this monthly candle. But when you look at the monthly candle on, let's say, SPY, it has barely covered much distance on this monthly candle. It's only just starting, right? That's something you need to be aware of, that this bottom which got printed, the main reason S&P 500 is like lagging behind is because it's waiting for FOMC meeting and the earnings, big tech earnings, to actually be gone through. And the index is the last one to move, but AMD is like already kind of signaling that this is what's going to happen when you come closer to the FOMC meeting. That there will be like massive move happening in the market, and you will be like closing in onto new all-time highs for most of the stocks, and the index should be like trading a lot higher than what it's trading at right now. So even QQQ, it hasn't really gone up that much. Like when you look at the distance covered on the QQQ candle, it's not that much in comparison to AMD, which has gone like humongously. Right, so I think the main reason for that is that Apple hasn't really gone up. So you're doing the right thing by positioning in Apple because it has like a lot more upside to it than any other stock at the moment, which is in the big cap category. Same thing with Netflix. Netflix hasn't really started going up yet on the month because it's generally just waiting for its earnings to come out. I don't know where the earnings is going to go. It could come down, it could come up. But eventually, I know after earnings is done with, it will likely start punching higher because it has to follow the index and it has to go to new all-time highs. So that's something to consider as well. I don't want to trade Morgan Stanley. SMH is like on steroids because EMD is on steroids, right? So SMH is like punching new all-time highs, and that also shows you that most of these ETFs or indices, they're way past their all-time highs. Like they're already kind of like getting close to their 0.618 extensions, right? So if this ETF is going to 0.618 extension, that also means that SPY will be going for 0.618 extension too over here. Like SPY will be going to like 561 or something at some point, and that's a longer term target to keep in mind. That like S&P 500 is like the daddy of all the stocks, man. So if AMD is going for a 0.618, it hasn't even touched 1.272. So if it's going for 168, 161.8, that basically means that every other stock index is also going for 161.8. Yeah, he's the daddy. Like Spy is the daddy. You don't like fight the daddy. Same thing with QQQ. It's gonna go to 161.8 extension. But if you want to go for the stock indices and you want to look at it from there, Nasdaq can go to like 20,000 before it slows down. One of the main reasons I'm saying that is because Microsoft, it's way beyond its past all-time high, and it's already reaching for the 161.8 extension. I think I mentioned on Microsoft that 420 was my target at some point. That after you tag 1.212, like it did not even start at 127.2 extension. It's already like closing above that. So that tells you that it eventually just wants to go to the 161.8 extension before something happens for Microsoft. So it's clear waters, in my opinion, and the rally is just starting for the year, for the month, for the quarter. So yeah, buckle up. And I think February will be also be like a bullish month. After February, I think there will be some kind of a pullback going into March. But whatever the pullback is in March, you kind of like just need to buy it. And we'll discuss that later after it happens. But I'm more so discussing what the positioning should be for the next 2 weeks or so when you go into these big earnings and the FMC meeting on January 31st. Is it clear so far on what I've discussed and how the market should be behaving? Yeah, I'm gonna go off too. I need to have dinner. I haven't even eaten anything. So, but I realized it was late for you. That's why I hopped on. But it's better to do it right now than wait for me to have dinner. Yeah, no problem. But I'll wrap this up. I've recorded this. If you want to like revisit it, I can post the recording. You can rewatch it. Yeah, no problem. Have a good night. Bye.